The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Okay, folks, this is November the 14th. This is Larry Pesavento for TFN, and this is a really critical day, folks. We had the solar eclipse and new moon yesterday. The markets made a slightly lower low than last week, which is expected. We can easily go one day, beyond the lunar event, but boy, we can't go two. If we close really badly today, that's going to set up a very bad scenario. Now, what I did today in Tiger TV is I posted a chart that was done by one of our Tiger TV folks, Mr. Zita, and he put this is a really professional chart, folks. This is what Bill Foster was talking about as far as the $1 million trade. If you look at it, you'll see the SPX versus the gold. And what that means is you're going to be short the SPX and long the gold. That's basically what you're looking at. And so this is a very difficult trade for most people because it's a heavily margined trade because both of them have big margins, and you don't get a spread margin because they're totally different things. But what I'm going to do in tomorrow's trade, I'm going to look at the S&P puts that go out quite a ways. The gold calls are ridiculous, but I'll look at those too. But frankly, I do not like looking at those. But at this time, we have to look at them, and I'm going to show you why. By the way, Bill Foster did a great job, I thought, and I really enjoyed everything that he had to say. I've got another chart here from someone from Italy that sent me a really great chart on the astro aspects that Bill was talking about, and I'll put that a little bit. But I wanted to get into something that I'm very familiar with because we have a potential for this occurring right now, and that is basically we have the one thing I did want to mention is the greatest comment that of the whole show that Bill Foster had. And Bill is a really great guy. He's a really normal guy. He's got degrees in psychology and stuff. But when I asked him about the Mayan calendar on December 22nd, his answer was, he said there was a story about the two Mayans that were chipping away, making the calendar, and they ran out of rock. And one looks at the other and he says, "Wow, I wonder how history is going to talk about this." So we'll see. Anyway, the next chart that we have could be something really significant. We won't know for 2 weeks, but this is what was happening in August of 1987. We had a solar eclipse coming into late September of that year. And then about, it was exactly 14 days later, we rallied up into the lunar eclipse and full moon of, the date was October, I believe, the exact date was either October the 2nd or October the 6th. It was October the 2nd, I believe, because as you can see on October the 19th, just about 10 days later, 10 or 12 days later, the market had given back 33% of its value. It was the biggest drop in the history. This was Black Friday of October of 1987. The Dow gave up 1,600 points that day. And it was really, a very, very bad day in the market, as you can imagine. And remember, it gave up that much when it was trading at 2,800, so it was a really big drop, as I recall. Actually, I think it was down 700 points. That's what it was. It went to 1666. The low that it made on the 20th was 1666 because that was a 61% retracement off of the low of 1982. So what we're looking at now, what we have here is a very similar situation to what we had in August of 1987. We had a big run-up. We had the move down, and hopefully, if this is correct, and I hate to use the word hopefully, we'll be making a bottom here in the next day or so, either today or we can't go much lower than where we are, and I'll give you some ideas why. But if we rally up into a retracement here, into this lunar eclipse on the 28th, that's when you want to buy the puts. And that's what we're going to be looking at. I bought puts. I bought October puts that year, and they expired on the 16th of October. That was the Friday before the crash. The crash occurred on Monday the 19th. So on the 16th, my puts expired, and I made a great deal of money. I had a daughter in Harvard at the time, and I was able to take care of her tuition just on a couple of puts, and it was a huge move. Had I had November puts instead of October puts, I would have been able to buy Harvard. Actually not, because you couldn't get any liquidity in them, but it was I think it was 20 times what my original payoff would have been. We've got a call from Rick in British Columbia. Are you there, Rick?
Hey, Larry, how you doing?
I'm just fine, sir. How are you today?
Oh, really good. I agree. I think it's not today, because if you look at the Qs, it looks to me like we're doing an ABC, another small ABC down to about 62.
We certainly would do that without any trouble. That's correct.
Oh, we have volume today to the downside.
Yes, that's correct.
We're taking out yesterday. Now, what I'd like to sometimes do, because they quite often correlate, is the euro.
Mm-hmm.
And with the Qs in mind, I think probably maybe tomorrow, or whatever. Options expiration. I don't know if that, for some reason, that always seems to hold the market up too. But are you looking to pull back on the euro to that little breakout? You're looking for around 126 on the euro. Like, have you looked at the euro much?
Oh, I trade the euro just about every day, Rick. I hardly ever go a day without trading it. We're still in a pretty good downtrend in that. We're having a little bit rally back today. From our low we made down to that 126.80 area, and so it really doesn't mean very much to me. What means what's important to me right now is what's happening, with the Nasdaq, and what's happening with the Dow, and what's happening with the NYSE, and the fact that we're over this big cycle, because it's not as big as the cycle that comes in on the 28th. But if it sets up this way, it's one of those times. It's one of those times where you can make 10 times your money on very little risk, and you don't see those very often. You really don't. So this is what I'm focusing on.
Now, what service do you use, or do you pay for it overnight? I use bar chart.
Mm-hmm.
It's a 20-minute delay, and it actually the volumes seem to be fairly consistent.
There's nothing wrong with that, and a 20-minute delay actually can help you. That way you're not staring at the chart all the time. I pay an exorbitant amount. I should say the charges that are afforded me are exorbitant. A CQG is $1,000 a month, and then we have Ensign, which runs about $50 a month, and then I have eSignal as my data source. That's around $600 a month. So those are my data charges. But remember, I'm looking at a lot of different things and advising, quite a few people. So I've got to have better data than what I really knew,
I use eSignal too. I got about 20 pages with a bunch of quotes on, but I don't use. Yeah. I don't look at charts on there. I never have. But I guess I have to dig into that. But anyways, so okay. Well, that's cool. I just thought I'd mention the fact that it looks to me like if you look at the Qs on a bigger picture, it looks pretty looks pretty bearish. But it doesn't mean we can't get a bounce out of here.
This is what I'm expecting. I mean, I'm really expecting a bounce. I thought the bounce would occur yesterday because of the way we went down, and then we had a pretty good rally back, and then we gave it all back, and we took out the lows of last Friday, which is acceptable, November 9th. We took those lows out, but, we can't go much lower than where we've been today, in my opinion. Otherwise, it could start cascading down. The ideal situation is that it holds here and then rallies into the 28th. That's going to set up the mother of all good trades, in my opinion. So we'll have
that's for sure.
Wait and see.
Exactly. Okay, what's the mine date?
The what?
It's the mine calendar, right?
Oh, that's December 22nd.
Oh, okay, so so then we're going to sell off into that date? Everyone's going to be scared?
No, December 22nd. No, you just get ready for Christmas. That's all you do. Make sure Santa's got his milk and cookies. Don't worry about it. I think Bill Foster's analogy that the two Mayans were chipping away and ran out of rock, and that's why it ended. This is not going to mean much. I don't know. There's a big astrological event. There's no question. It's known as the solar drift. When the tilting of the sun meets the I think it's the I don't know what it hits the equator or something, but it only happens every 25,000 years. But frankly, that it's not going to be the end of the world. And if it is, Rick, I apologize to you. Okay.
Yeah, we'll talk about it then later. Then. Okay.
Yeah, we'll talk about it on the 23rd.
That's right. Okay. Thanks a lot, Larry.
You bet. Okay, now I wanted to talk just a little bit. One of our friends just sent us a really neat chart going back, over the last 10 years, and you'll see that the swings that we've been having in the E-mini, this is the S&P with it's been updated, to roll over to contracts, but you'll see that the moves that we've had have been 800 points up, 800 points up, and the last time we had one of these during 2009, we came down 900 points. Well, that would take us back to 600 in the S&P, and that's half of where we are. That's what Bill Foster was looking at. Now, I don't know if this is going to happen or not, folks, but all I'm saying is that if we do what we did, like we did in 1987, and markets repeat, and many people that do these things, don't remember that, that they repeat, and they don't keep ideas of why they repeat. And so what you want to do is to try to watch this repetition that we have, and that would give us a chance to do it. So the chart that's in Tiger TV that I posted showing the 1987 market, and we're going to be looking at that more than once or twice, this is what we want to be watching, because if it fulfills like it's supposed to, just like I'm going to put it in here again because this is very important. If it does this, it makes the low today or tomorrow, today or, it can't get much lower than where we were today. There's no question about that. But if we start to rally into the 28th, which is the lunar eclipse and full moon, it's going to be exactly like it was doing in 1987. And if you believe in probabilities, this is what you ask for. The market might not repeat, but it's got a lot of rhythm to it. So this is what we're going to be watching, because if we have that and it occurs, we'll be able to buy puts relatively cheaply. We're going to be looking at stuff way out of the money, at least 4 or 5 strikes out of the money. In 1987, I paid $100 for 3 strikes out of the money. And, of course, the S&P was trading at around, I believe, around 310 at the time, and I was buying, I think I was buying 220s or 240, something like that. And when they went off at at some ridiculous amount, it was incredible. So we'll just watch it. It might not work, but the good thing is it's going to have everything that we look for. Very low risk, lots of harmony, lots of patterns, and some astrology stuff. I mean, this is Mother God and country. You can't ask for more than that. So this is one of the things that we'll be watching very, very closely over the next couple weeks. And, of course, if we're wrong here and the market just melts down from here, we'll have to, reassess what happens, when we come into the lunar eclipse on the 28th. But that's what it's looking like now as far as, where we are. Now, today's low, the exact low today so far, and this is why I think it's very important, in the Dow Jones is exactly 61% of the low that we made in June. That was if you remember, that was a full moon. We made a big ABCD expansion. You'll see on the chart there where the CD leg is 1.27 of the AB leg. It topped exactly at this 13,675, and now we've made an ABCD to the down leg, and the BC leg is exactly 38%. All that fits together, folks. Mother God and country. We got to pay some bills here for our fearless leader, Mr. O'Brien. 877-927-6648.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. You take a hands-on approach to managing your investments. And whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com.
Okay, folks, we're back, and I've also posted into Tiger TV the daily chart of the New York Stock Exchange Index, which is a broader index of all the things that we look at. And this chart is also making a CD 1.27 expansion of the AB. So we're at a real critical level here. You know, if the Dow closes, down more than, I would say 125, 150 points, then we'll say, we take a look at it. A question that someone asked me was this a Gartley pattern that we're seeing in the New York Stock Exchange Index and also in the Dow Jones, and that is, in fact, exactly what it is. Now, what I wanted to do now is to talk a little bit about Apple, because, we have been following the stock ever since it's, started making its top, way back when. And now what's happened is that we've done the same thing in Apple that we've done in all the other things. The CD leg is 1.27 of the AB leg. But what's important with Apple now, folks, and this is what I covered earlier this past week, actually on Monday and Tuesday, we were watching Apple, and in fact it's doing the same thing that we're looking at. We have a potential for higher bottoms here in Apple. In other words, Apple is holding up a little bit better than the rest of the market. It did not take out the lows from November the 9th, where the rest of the market did, and then we made several higher lows. We were buying the stock at around the 538 level is what we were suggesting, or to buy a call at that point that I do that through the videos that I use. But right now, the Apple is held relatively well in this 540 level. And if Apple goes below 533, you can shut the door because I have no idea where it's going to go. But right now, it's holding up okay. And, if it does turn, it will be a surprise to a lot of people, I suppose. What's truly amazing is, the whole world wanted this stock at 700, and nobody wants it at 543. I mean, go figure. But that's how the markets work. It's not a question of, what the value is. It's what the perception of what the value is. And that's why I think it's important to keep an eye on that particular one. Now, the other one that looks real interesting that I posted into the market today, that is the stock of TBT, which is the ETF for the Treasury bonds. I've done it over the last 3 months, and you can see that it's a beautiful harmonic picture of a 1.27 expansion, and then a 786 retracement that came down into October. Then we had a 61% retracement that occurred into October, the middle of October. That was actually a very nice, Gartley pattern that formed there. And I will put that one into Tiger TV also, and you'll be able to see it. And now what we've had is a move down where we've completed a big ABCD down over the last month. And so the amount of risk that you have to take here in the TBT is very small. Now, if this is a correct pattern, this means that, bonds are getting ready to sell off. And that's a $64 question because we don't know the answer to that. But this is what we're looking at as far as what the TBT is. It's a very low risk point. And remember, this is split 4-to-1. So this thing used to be trading at around 13 or 12. And with the 4-to-1 split, that's where we are now. So this is something that we'll watch over the next few days or so. But if you wanted to take a look at that from alongside, the risk here is very, very small. It's only about 70 or 80 cents per share, so it's not too bad to do that. Now, I wanted to share a chart with you folks from one of my students from Italy, and it's a very interesting chart. It's has to do with what Bill Foster was talking about. Now, this is a long-term Jupiter cycle, folks, and Jupiter is a cycle that is 4.5 years. And what he's looking at is the signs between Taurus and Sagittarius, and the problem is this cycle is so wide that it has a very wide trading band. In other words, it could be off by 2 or 3 months and still be correct. So what we're trying to do is to narrow it down by looking at the lunar cycles, and this is what we're watching today. We have the solar eclipse and new moon yesterday, and if this market can move up, it doesn't have to move up a lot, but if it can move up into the 28th of November, it's going to set up what I think is the mother of all shorts, which is going to be similar to exactly what happened in 1987. As a matter of fact, there's some astrological things that line up that are very similar to 1987. So these are shorter-term things that I'm looking at. The chart that this gentleman did, and he did a tremendous job on it, was to just show you that the relationship between these is quite, quite startling. But the problem is it has a trading band of 3 or 4 months, and you literally can't do anything with anything like that. You have to get down to, the nuts and bolts of not risking very much. It's a question of how much we have to risk here. Okay, we got to take a quick break here. Boy, time is really flying. 877-927-6648.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Okay, we're back, folks, and what we're looking... I'm going to share some statistical information for you that I think is important. And the main thing that I want to do right now is to try to get it into the Tiger TV so all you folks can see it and that we'll be able to all see it at once. Basically, as you know, I do a lot of research because I try to not watch the machine, and it allows me to look at certain things. And over the years, we've looked at the number, the trading days of the month, whether they're positive or negative. And what we're looking at here is the number of trades. There's usually 22 to 23 trading days every month, depending upon whether it's a 30 or 31-day month. But the first 3 days of the month are very, very positive, as are the last 2 days of the month. So the last 3 days of the month and the first 2 days of the month are the most positive days of the month. Now, the worst are the 10th and 11th, and that's yesterday and today. That's the 13th and 14th of November. These are negative days. So, whether this is correct or not, we have to, we'll see what the fine's going to be. The 19th is going to be out near the near that 28th date that we're looking at, so we'll have to wait and see. Anyway, this is encompasses over well over 1,500 samples because we've kept it up to date through this time. But this is the 63-year period between 1927 and 1990, and the statistics are still the same. They haven't changed at all. And so you've got a lot of samples, and it might help you especially if you have to be a buyer or something, or a seller or something. You want to buy it when it's weak and sell it when it's strong. But these are the statistics that we're looking at when we're watching the market to see what the statistics are going to be for that. Now, someone asked a question about the Treasury bonds because of the fact that I mentioned the TBT. And, we've had a pretty big rally here in Treasury bonds over the past few days. We've actually sold off quite a bit from the highs that we made, last week. But I'm going to post into the Tiger TV the longer-term picture in the bonds because I still believe that we have a really strong probability of making this 155 level in the Treasury bonds because we have we spent a lot of time up here. And I believe that we're only a point and a half away from the old high at 153 and change. And our old high that we made just a few days ago was 152.16. So we're getting really close, and that usually means you've got a chance to get up to this level. And boy, if we do, folks, I really think that's where the next black swan is going to come from. And a black swan is an event that nobody else is anticipating. And, we've been looking at the long-term chart of bonds, at this 80, from 1980 to where we are now. And that is such a very bearish pattern. It's got so many things that are telling us that, we are reaching a big top. We haven't quite, turned down yet. But, we're still in an area where we should be able to. And I'm going to put into Tiger TV because all this is going to fit together as near as I can tell. And you'll see that, we've been looking at this move from 1981 when interest rates were 15-16%. I mean, T-bill rates were 13%. Tax-free muni bonds, tax-free, were 16%. They were called away after about 2.5 to 3 years, but that's what's happened. I think we're going to have the reverse of this. And I also think this is going to be the the Achilles heel of the Federal Reserve. But, history will have to wait and see if that is going to repeat itself. But, when you have debt like this, it's really bad. I mentioned on Monday's show the importance of what I thought that History Channel show was, the Men Who Built America. It's a 12-hour miniseries, and boy, it is fantastic. It's all about Rockefeller, Morgan, Carnegie, Vanderbilt, Henry Ford. It's just really fantastic. And, it shows you how even they got into trouble when their debt, got totally out of whack. And so this is the importance of, history is that if you don't study it, you're bound to repeat it. That's one of the things we try to do. So we do believe we have a chance for these bonds to go up to make another big high. And if we do get a, big correction in the market, there's going to be a flight to safety most probably. And that's what we would suggest that would happen, is that we'd be looking at that as a potential, what I would call a potential black swan. In other words, no one would be expecting that. There are a few people are, but not many of them, and most people are very very, very quiet about it. Now I'm going to put into Tiger TV the tradable part of the bonds, and this is the intraday chart going back over the last several days, and it shows the big ABCD pattern that formed down here this morning at the 151 level. 151.10 was the exact low, and we had a big retracement of just about $1,000 or $800 a contract, and that's just showing that these are so easy to trade. It's like trading the Forex markets, that it gives you a lot of different opportunities, to do these particular trades. We do have one other one that is forming right now that you folks have an interest in, foreign currency, and I know you've mentioned it, and this is a longer-term chart going back, 6 weeks, using a 30-minute chart. You'll see the British pound on a 30-minute chart has now come down and made the 1.27 expansion at the 158.36 level, which was so far the exact low today. So in that area, if you're looking to buy it, you're able to see that you don't have to risk very much. You're only risking maybe a few $100s, and that's that's the answer that we're looking for, is the amount of risk that we have. One of our listeners has asked the question about the what are we going to do on November the 28th in the stock market if it's just flat, and I don't know. I'll have to wait and see, but that to me means that it would even be more bearish. All I'm going to do is on Thursday's show and again on Monday's show, and I'm going to repeat it as often as I can if it does fulfill what we think is going to happen, is what could happen. Nobody knows for sure, and that's the fun about trading, is all we can do is control our risk. But at that point, on November the 28th, if we are into a rally, we've got a real chance for a similarity to what happened to 1987. And I can tell you, folks, that's been 25 years ago, and the number of people that are out there listening to us in investment land, the number of people who were in the market that day, you can count on one hand. I mean, there's a whole new era of people. We had the dot-com dudes of 2000, and then we've had the Flashpoint, what's it called, Flashbook? I can't even remember. What's that thing with Zuckerberg owns? Facebook. We got those people, and what Steve Jobs did with Apple and stuff. So it's a totally different mindset that people have. And we have a lot of people invested in hedge funds and mutual funds, and believe me, they can't get out quickly, and this is where you get these really catastrophic moves. I haven't been on here talking about a crash for a long, long time. In fact, I don't talk about it very often unless I really see the statistics coming in. And if this unfolds like we think it could, in other words, a low coming in today or tomorrow, and then we have to rally up into the 28th of November, and that'll be a real interesting day because that's going to be the full moon and lunar eclipse. That's going to be on a Wednesday. It's 2 weeks from today, so we've got 10 trading days to go into that, and it should be very, very interesting. And if it does, this is what this cowboy is going to be doing. I'm going to be doing what I did in 1987, and that is try to get on the short side. And if it's right, you make a lot of money very fast. And if you're wrong, you make a small amount. You'll lose a small amount equally as fast. So that's the main thing. That is the scariest day in my 50 years of trading was October the 19th of 1987. And I was short. The problem was I thought the brokerage firms were all going to fail, much like we had with MF Global and Peregrine Financial, PFG Best. Can you imagine if we have a crash like this with some of the things that are out there now with these exotic instruments that are there? I mean, oh my God, folks, this could be the, like Warren Buffett has always said that derivatives were the weapons of mass destruction. And if that's the case, this could really be something bad. I shouldn't be talking like this. I don't mean to scare anybody. All I'm talking about is a potential trading opportunity coming into November the 28th, and that's all it is. And, it can fail just like a lot of them fail. But if it happens, it could be exactly like what happened in 1987, and what we're looking for is similarity. No matter what happens, folks, we live in a great country, and we are going to survive. No matter what happens, we will survive. Maybe not in the way that we think we're going to survive, but we will survive. We've been through several world wars and, a couple of depressions and a civil war, so I'm pretty sure that we've got the things going for us. Oh, one other thing, there's a wonderful movie coming out on Friday about Abraham Lincoln, my favorite president. And, of course, the name of it is Lincoln, and it's about the Civil War and the financing and the stuff that went through what was going through the country at that time, and that's also going to be a really great movie to take to watch. So watch that if you get a chance. But the free one is on History Channel, The Men Who Built America. That to me should win some Academy Awards. Whether it does it or not, I'm not sure. Now we need to get to the gold market because we have had some pretty good moves in gold recently. To the upside, and we've gone sideways now for 5 days. We've gone, virtually nowhere, and that usually means that we're getting ready to go higher. And all I'm going to do now is to post a 30-minute chart on gold, and just show some of the smaller patterns that have occurred. And basically what we've done is we haven't even quite made a 382 retracement. We missed it by about $5 a share. So, after we hit that 1737 level, if we can get above 1740 in the gold, we've got a chance for, a pretty good move to the upside. Because on the longer term, the longer term daily chart that we've been watching for so long, we had all those higher bottoms that we were watching, way back in the May-June area. We were very bullish, the gold at that time. And what we're trying to do now is to see if this little correction that we had at the 50% level is going to hold, because the move that we had back up stopped at the 382. That came in at 1736. But what's happened now is for the last 4 days, after we hit 1737, the market did not go down very much. I mean, it backed off virtually nothing at all. That's a sign of strength, folks, especially when you have a chart like we've had in gold that I put into Tiger TV. We had 1, 2, 3, 4, 5 higher bottoms. You don't have to be a rocket science to figure this out. I mean, if you got a higher bottom, you're in an uptrend. And that's what we had. And then after we had the big run-up, the one that went from $1,600 to almost $1,800, that's $200 an ounce, we've only been able to back off about 38% of that whole move, and that's very positive. And then we came right back, and took most of that money back in a few days. We rallied better than $70 an ounce. But in the last four trading sessions, we have not been able to back off at all. And that's with the stock market, coming down quite a bit. So this is another reason why we need to be, watching, what things are happening with the gold market, because I still believe that, if we get gold above 1,800, we're going to be looking at $2,500 gold, without any trouble at all. That would be, very similar to what Bill Foster, who was our guest on Monday, was looking at, and that was the fact that he was looking at the price of gold to, get somewhere, around $3,000 an ounce, which is not very hard to do in these particular markets that we have right now. Now, there is a caveat here, and that is the price of Newmont. And we were watching Newmont very, very closely here, way back in August when we were making a double bottom. And double bottoms are usually formed by the AB equals CD pattern, as you can see. If you go into Tiger TV, we had a 3-drive to a bottom pattern in May. We rallied up into point A, and then we made the AB equals CD move down into August, and that's what happened. Now we rallied to the 61% retracement. We rallied over 25% in that stock. Then we stopped right at the 61% retracement. Now the problem arises because we have come down very, very hard. We're now trading below the 786 at 4,600. Now, you'll notice if you go into Tiger TV, you'll see a gap and a very long-ranging bar right at the 38%, the 50%, the 61%. It had a terrible day that day. The stock was down about 7%, and that was telling us that, this market wanted to go lower. And now we've continued to go lower, and we're coming down now to the 786, and we're trading just a little bit below it right now. Now, if we do not hold this level, at this 46 level in Newmont could really be in a lot of trouble. That doesn't necessarily mean that gold's going to be in a lot of trouble. It just means that Newmont mining could be in a lot of trouble because it's a mining stock. Gold is the metal itself, and that's the beauty of the things that we look at. Now, someone asked me to take a look at the XAU because we've been looking at that also for quite some time. And it's had some wonderful ABCD swings all the way through here. And if you'll give me a second to update it, we'll have it ready for you in just a second. And you'll see it pretty easily. I've got to do one little bit of housekeeping here because I've been gone for a while before I posted this chart. And it is a very nice one. And we're going to take a little break here, and I'll come back and we'll talk a little bit more about this. And we also want to talk about copper, 877-927-6648.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back for the final few minutes, and we've got our call from our friend in Philadelphia. John, how are you?
Very fine, Larry. Thank you for your good work here today. Larry, I wanted to share just a couple of facts and a thought on the gold market for you.
Fire away.
You had mentioned 1800 as being a key mark as you see it, a break over which could unleash a flood of buying. You secondarily mentioned the lunar eclipse, the full moon, that Wednesday, November 28th. I have something that may feed and dovetail right into those two ideas very nicely.
I hope you share it with us.
Yes. As you know, December COMEX gold futures contract That has been the lead contract, Larry, for a good number of months. On
at least 9, yes.
The fact that the last lead contract was August, and once that expired, the December contract was the next lead that we've all been trading since. Now, the rally that took place in gold from that 1580 level up to 1800, that occurred from, say, week 1 of August in through October 1st. So all the while as that rally is taking place, the December COMEX gold contract was the lead, and people who were bullish, speculating on further upside, they would have been using the December COMEX gold call options. Now, there is a huge amount of call option open interest at the 1800 strike. Yeah, that you can figure all makes sense on the account that in September and then into October 1st, gold got up close to that level, so people might have been buying that strike. Now, one last point. I have studied this for 15 years, and the fact is that come expiration of COMEX call options, and by the way, the next COMEX call option expiration date is Tuesday the 27th, the day before that lunar eclipse. But on those COMEX call option expiration dates, Larry, this is the fact, 95% of call options expire worthless. And whether that's because bullion banks are particularly good at capping the market or just other natural market forces, we could all debate, but that's the fact. The idea being, if history is any guide, you'd expect that 1800 strike in gold not to be exceeded before that last trading day, which is November 27th.
That's great information, John. Great information. Many thanks, and we're ending the show, everyone. Have a great day. Live every day in an attitude of gratitude, and may God bless.